For what this all means for stocks, let's bring in Jeremy Siegel, Wisdom Tree Chief Economist and Wharton School Professor of Finance. Jeremy, great to see you. Happy holidays.
Thank you.
Labor market still doesn't give you too many things to worry about in claims, although yesterday people were looking at Conference Board job differential and what that might mean for, I don't know, the prospect of a jobless expansion, let's say.
Yeah, the sweet spot for jobless claims, is between 200,000 and 240. We have just been there virtually every week, which is really, shows, not an overheating labor market to say the least, but one that is certainly not deteriorating and, setting us up for potentially good 2026.
Do you think a more dovish rate environment can unwind some of the job loss that might come from technology?
Yeah. I mean, I think we should be in the low threes on the Fed funds rate. I mean, we really had a good inflation report, and I don't think it's as distorted as a lot of people had feared. The housing component is going to actually contribute a downward pressure for, I think, many, many months on the service part of the CPI over the next year, and that's going to keep it in line. Once the Trump bump of those tariffs, which I think we're mostly through, maybe a little bit more in the next month or so goes through, I think we would be on the low twos on the CPI, enough for the Fed to get the rate down further.
Fed policy, though, Professor Siegel, isn't in a vacuum, and you also have the backdrop of a fiscal stimulus in the form of changes to tax policy, which could benefit individuals in the form of bigger refunds, lower tax rates, as well as corporations. So how do you balance the two in terms of, on the one side, you have things that could actually spur growth, spur some inflation, and on the other side, you've got also the Fed that could lower rates?
Yeah, and as Carl mentioned at the top, we still have two little bumps we have to go through before those tailwinds you just mentioned take place. I mean, we do have a Supreme Court ruling likely in a few weeks about the legality of the tariff. Now, my recommendation is basically what the Supreme Court should do is say to Trump, hey, you need approval of Congress. We're going to give you 6 months to get it, rather than just saying it's illegal, give refunds. I think that would be real disruptive. So we're going to have to see how that proceeds. And then, hey, let's not forget, there may be another government shutdown on January 30th, something nobody wants, but and few are talking about now. If we get through those two bumps, those tailwinds that you talked about are certainly, operative over the next year.
Yeah, it's really, I think the picture right now of push and pull for Q1, Q2, you mentioned the tax refunds, maybe checks from Congress, we'll see, certainly gas prices, all positive. And then on the negative, if they start seizing student loan payments, or electricity keeps running double CPI, or ACA subsidies expire, I mean, that's a real balance of risks and tailwinds, isn't it?
Yeah, it is. I mean, the ACA subsidies are going to be the big battle. I mean, the Dems have certainly put their hat on that as being the somewhat of what they're going to campaign on for the midterm election. So, I think we have to look at what's going to happen in 4 weeks there, and what the Republicans are going to do. That is, healthcare costs, electricity costs are the drags. Certainly, gasoline costs are certainly a positive. The refunds are definitely a positive. And the fact that, rental prices and home prices have stopped going up. They're still expensive and, certainly out of reach of quite a few Americans. But at least we don't have that, double-digit inflation that we had in the early 2020s.